Hey everybody, I'm Mike Desepoli and welcome to the Heritage Market Pulse for Friday, September 10th, 2021. Markets are struggling for direction this week in the holiday shortened trading week. Very uninspiring action, market trending lower for all 4 days this week. You'll likely hear a lot about that in financial news media. But before you get too concerned, let's keep it in context. Markets are still just 2% away from all-time highs. So even though we've seen the markets move lower this week, it has been day by day in a very small fashion. Nothing really to write home about. And this is very normal action for the first couple weeks of September. Many investors are well aware at this point. It's been widely publicized that seasonality historically is weak in the first 2 weeks of September. So it's very natural to see larger institutional investors basically just sitting on their hands at this time, waiting for the market to pick a direction in which it will move. We continue to believe that direction will be higher, but nonetheless, there are a lot of things right now that the market is contending with and trying to digest, and it's very normal for us to see increased volatility. These moves in the market price up and down, volatility is generally higher in August and in the beginning stages of September. Big news of the day that is also affecting the market is there was some news regarding an antitrust case against Apple. And anytime you have a company that large, about $2.5 trillion in size, if there's any negative market moving news that are affecting a particular stock of that size, it's likely to weigh on the market a little bit. Not huge moves here for Apple. I think at last check, Apple's down 2.5% on the day. So nothing catastrophic, but again, a stock of that size, market cap, if that tends to sell off a little bit, it'll have an effect on the broader markets because it's in so many market indexes. Other news of the day that the market is not receiving too well, proposal by Senate Democrats to put a 2% tax on stock buybacks. Now, there's not a lot of information released about this just yet. Who would be taxed? Is it taxing the company that's issuing the stock buyback? Perhaps taxing the investors in those stocks, which we don't think would be a very fair scenario because investors don't actually receive anything in stock buybacks. All it does is essentially put a floor under the stock price because there's a large institutional buyer, in that case the company buying back its own stock. So this is probably just an initial salvo in negotiations to try to lob one across the bow to see, if it'll stick. We don't think this is a good idea. We don't think this will be something that will actually be put into law, but nonetheless, market likes to react to headlines and then figure out the facts later on. We continue to see investor sentiment is negative to neutral. We've talked about this for many weeks now. Many investors fearful of this market, have one foot out of this market, preparing themselves for this market to crash. And folks, this is not how crashes happen. The crash that everybody sees coming is the one that never happens. I've said it before and we'll continue to say that ad nauseum. We believe that the stage is set for this market to go higher, barring any drastic action from the Federal Reserve, which we do not think will be the case here in 2021. And when you look at the setup for this market, a little consolidation, a little sideways action, while it can frustrate investors, and it's supposed to, a little sideways action can be very healthy. You've heard us say before, from contraction comes expansion, and we tend to look for these types of patterns, repeating patterns in the market to get a good feel for where the next move will be. News will pick up a little bit more next week as we start to move towards third quarter earnings season. It's hard to believe we just got through the second quarter earnings season, and just a couple short weeks from now, the pace of earnings reports will start to pick up yet again. There's still some concerns out there about the economic recovery. We've got some news this week from the airlines that they've seen a decrease in bookings over the last 60 days. Many of those executives pointing to concerns about flare-ups with coronavirus as the reason for that. So that's something that bears watching. Our heritage high-frequency data still looks very good. A couple soft spots will not throw off the overall trend, but we are watching that closely as always, and we will report back on any changes in our findings next week. That's all we have here for today. If you have any questions, reach out to us. Always happy to talk to you about the things that matter with your money. We hope you enjoy your Friday. Have a great weekend, and we'll see you back next week for the Heritage Market Minute.